You know that feeling, right? That magnetic pull to buy a stock just because everyone, and I mean everyone, is talking about it? Or maybe it's that knot in your stomach when you're selling during a panic, because everyone else is. Well, that feeling has a name. It's herd mentality. And in today's explainer, we're going to break down exactly why it happens and, way more importantly, how you can build the mental armor to resist it. So let's just dive right in with what might be the most famous and, let's be honest, most ignored piece of investment advice ever given. This one quote from Warren Buffett just perfectly captures the battle every single investor faces. It's the battle between your own analysis and the deafening roar of the crowd.
So why is it so incredibly hard to go against the grain? Well, it turns out this instinct, it's not some modern flaw in our thinking. No, it's a feature hardwired into our brains for survival over thousands and thousands of years. I mean, think about the contrast here for a second. For our ancestors, if the rest of the tribe suddenly started running from some rustling bushes, you didn't stop to do a detailed risk-reward analysis, right? No way, you ran. And that's what kept you alive. But fast forward to today's markets, and that exact same impulse, buying that hot stock because everyone else is, can be absolutely devastating to your finances. The instinct is the same, but the playground has completely changed.
And you can literally watch this instinct play out in the markets through a totally predictable cycle. It all starts pretty innocently, right? Just a bit of uncertainty. We feel unsure, so we start looking around for clues, we see what other people are doing. Then, a few early movers create this information cascade. Suddenly, a mass movement forms, and all individual thinking just gets tossed out the window. Everyone is just following everyone else, right up until the moment the bubble pops, and the whole stampede frantically reverses in a panic.
Okay, so this brings us to this incredibly powerful psychological force called social proof. It's basically the idea that if a ton of people are doing something, well, it must be the right thing to do. And look, while that might help you pick a decent restaurant on a Friday night, in the world of investing, it can be your absolute worst advisor.
Let's just look at the poster child for this, GameStop. Back in early 2021, this thing was driven by an absolute frenzy on social media, and the stock skyrocketed to a dizzying peak of $483 a share. Now, the logic wasn't based on company fundamentals, not at all. It was pure social proof. The thinking was, hey, millions of people on Reddit can't all be wrong, right?
Well, turns out they could. Just a few weeks later, the herd slammed on the brakes and reversed course, and the stock crashed all the way down to $40. This, right here, is the brutal, real-world price of following the crowd off a cliff. It's a painful lesson in what happens when likes and upvotes replace actual financial analysis.
And what's crazy is that today, technology has basically put this instinct on steroids. You've got social trading platforms that let you automatically copy other people's trades. Investment apps are constantly flashing what's popular, and then you've got this whole army of finfluencers and echo chambers online, all amplifying the same message, making it harder than ever to even hear your own thoughts.
And if you're sitting there thinking, "Phew, I'm immune to that," think again. Back in the 1950s, this thing called the Asch conformity experiment asks people to do something super simple. Just match the length of a line. Easy, right? But when they were surrounded by actors who all gave the same wrong answer, a shocking 75% of the real participants went along with the group's obviously incorrect answer at least one time. Just think about that. If social pressure can make us deny what's right in front of our eyes, imagine the power it has when we're dealing with something as complex and uncertain as the stock market.
But wait, it's not just the everyday crowd we have to worry about. There's another sneaky trap called authority bias. This is where we tend to blindly follow people we see as experts. And what's so fascinating is that these experts, well, they're often just part of a different, maybe more sophisticated herd themselves.
Yep, even professional fund managers are not immune to this, not by a long shot. They face immense pressure to own whatever's in their benchmark index. And here's the real kicker. For a lot of them, it's actually safer for their career to be wrong along with everybody else than it is to be unconventionally right and risk being wrong all by themselves. The entire system can actually incentivize conforming over independent thinking. So how do we fight this? What's the defense? You've got to create a mental checklist, your own authority bias checkpoints. Before you follow any expert, ask yourself these simple questions. 1. Do they have their own skin in the game? 2. What are their incentives? What are they getting paid for this advice? And 3, maybe the most important, if you strip away all their credentials and authority, does their argument actually make logical sense to you? Okay, we have thoroughly diagnosed the problem. Now let's talk about the solution. How do we actually start building an independent mind? Well, it all starts with having some concrete frameworks to lean on when that social pressure starts to mount.
So here's a really practical tool for this. It's called the contrarian decision protocol. Now, this isn't about just doing the opposite of the crowd for the sake of it. No, it's a structured process. You start by figuring out what's the popular opinion. Then, and this is the key step, you ask yourself, what would I think if I were the only person looking at this data? You do your own work before you read what everyone else thinks. You look at history, and you ask that crucial question, who really benefits from this consensus view?
You know, building an independent mind also requires a really strict information diet. You have to intentionally decide to consume more signal and way less noise. So what does that mean? It means more primary sources, like digging into company reports and historical data. It means actively seeking out well-reasoned opposing viewpoints. And it definitely means consuming far, far less of the daily market chatter, the social media hot takes, and the analyst price targets that are basically just fuel for herd behavior.
All right, let's get into the most practical stuff, the tools. Because when you're in the heat of the moment, when FOMO is kicking in, willpower just isn't enough. You need systems. You need a kind of psychological armor to protect you from your own worst instincts.
This is where pre-commitment rules are an absolute game changer. These are rules you set for yourself before you're under pressure. Things like, say, automatically rebalancing your portfolio, which literally forces you to sell what's popular and buy what's not. Or, and this is a personal favorite, enforcing a strict 48-hour waiting period on any hot tip you get. That simple delay lets the initial emotion and social pressure just fade away, giving your logical brain a chance to catch up.
Here's a really powerful mental model you can use anytime. It's called the empty stadium. It's incredibly simple, but man, is it effective. Before you make a big decision, I want you to mentally place yourself in a completely empty stadium. There's no one else there. No analysts, no influencers, no screaming headlines. It is just you and the data. What would you decide then? This little exercise is amazing for stripping away all that social proof and pressure to conform.
Okay, here's a second tool to fight our natural tendency to just look for information that confirms what we already believe. You can call it the opposite day model. It works like this. When an investment is universally loved, your job is to become a detective, actively searching for all the reasons why the crowd might be wrong. And on the flip side, when everyone absolutely hates an asset, you should spend your time investigating the case for why they might be missing something big. It forces you to always see both sides of the coin.
And all of this leads to what I think is the ultimate paradox of independent thinking. See, the goal isn't really to be a contrarian just for the sake of being different. That's just another way of letting the crowd influence you, right? The real goal is to become such a disciplined, independent thinker that you pretty much just ignore the crowd altogether. You focus on your own analysis. And hey, sometimes you'll agree with the consensus, but it will be for your reasons, not theirs.
So I'll leave you with this final question to chew on. Is the crowd ever right? Of course. Sometimes a popular stock is popular for a very good reason. The real challenge, and the whole point of this explainer, is developing the analytical toolkit and, maybe more importantly, the mental discipline to figure that out for yourself, completely independent of all the noise.